Hello everybody, good morning. Hope you're enjoying the conference thus far. So just want to tell you a little bit about Tuum, our organisation, and then and maybe a little bit more about what we detail on our expectations on the market and what's happening. Our mission is to set banking free and to sort of capitalise on the change that's occurring in the marketplace, which we see going on at the moment. So maybe a little bit about the business. It was founded in 2019 in Estonia, which has a very good reputation for technology. Sort of Skype, Wise, Bolt came out of Estonia by 5 Estonian founders, and I took over as CEO 12 months ago. So they wanted an operator CEO to come into the business and sort of drive it forward a little bit faster. We've built out quite an extensive ecosystem of partners that we work with. We have 100 employees across 3 hubs, really to sort of distribute our coverage from a commercial partner and technology, with the technology and product team still based in Tallinn at headquarters. We've had a great 2 years. We've had about 250% compound annual growth and continue to rise quite rapidly. And we successfully had a Series B raise at the end of last year. And then we actually had a follow-on from City Ventures earlier this year in February. And we continue to sort of service quite a broad part of the market. So we service both Tier 1 banks, financial institutions, but really we look to anyone who's providing a financial instrument, whether it be a bank, non-bank lender, a wallet, EMI for example. We have a technology platform to support them. So banking has changed, but has it? That's really the question. And I think if you start there, it was sort of very much bricks and mortar, product focused, very much from that perspective, but we've seen evolution occur. And really it's moved a lot to digitization, customer-centric, really facilitating sort of great customer experiences, which is the key, and really, scaled marketing and distribution models, using third parties to really support that. But the underlying systems, this is what they look like in 1970, and this is what they look like today. There's fundamentally nothing has changed. There's been significant investment in sort of those front-end capabilities, but the underlying technology doesn't really support what existing institutions and new institutions want to do going forward. So this is why we exist. The ability for us to actually provide a technology capability, which means you're allowed to focus on specific use cases that support the needs of what the customers are trying to achieve. And also, our customers, the banks, they have to move at a faster pace. They can't continue to take 18 months or 24 months to roll out new product and capability. So what do we mean by that? And we talk about 2 key factors of what we call as adapt and extend. The ability for us to actually break free from the operating model, grow through embedded finance, open up product sourcing. Those are sort of the key things that we look at and how we do that. So typically what you've seen with technology is it's been a one-size-fits-all, or it's been you have to build everything from scratch yourselves. And it's finding that ability for you to adapt to the existing market, move away, being able to innovate, not just spend all your money on regulatory compliance, are some of the key things that are supporting the growth that we see in the market. And what do I mean by that? If you look at sort of a number of the players that have come to the space, particularly the newer players in the past 10 years, they sort of sit at 2 extremes of the market. One being a one-size-fits-all model, and the other being that you basically have a framework where you have to build everything from scratch. And we're finding that the challenge is that there's lots of organisations out there that don't fit into either category. They need more capability and more flex, but they don't necessarily have the budget or the horsepower to support the ability to build everything from the ground up. So really this is where we come up with a model of adapt, expand, migrate, and extend. So give a lot of functionality out of the box, the ability to do a lot of capability, but then you yourselves can extend the code, expand the code, and actually create the uniqueness you're looking for from a product perspective to support your customers. But you still have to have the fundamentals, being cloud native, functionally rich, the ability to basically fast time to launch, modular, all the things that you hear from next generation technology continue to be critical, so you can't lose sight of that. And talking about the functionally rich, the ability to support the multiple use cases of what we're seeing in the market, crypto, cards, accounts, global deployments, really are sort of the key capabilities that you have to offer. We also sort of really adhere to this thought of what we call the ecosystem approach. Gone are the days where a single vendor can give you a complete front-to-back capability. So having a quite enhanced ecosystem of partners and organisations that you work with allows you to actually integrate or provide incremental transformation for the customers about how they evolve from one technology stack to another, and also how they necessarily solve problems. And we believe that this ecosystem approach allows organisations to get to market faster than necessarily these big bang projects which typically have failed numerous times across the market. The other thing for us is the autonomy without the total cost of ownership. High TCO versus autonomy has been one of the challenges that we've seen in the marketplace. So if you look at the quadrants here with the legacy cores down, you basically have no autonomy with a high cost of ownership. And then you have the new Neo cores that I taught the out of the box. They give you low cost of ownership, but they give you no autonomy because they're all cookie cutter, basically the same functionality. And if you go to the other end of the spectrum, with the framework base and you have to build everything yourself, you have a huge amount of autonomy, but the TCO is huge. Like it's really sort of six-figure, in the millions type investments required. So we really are trying to put ourselves into the top right quadrant, which allows you to give a huge amount of autonomy by giving you this flexibility or extensible core, as we call it, but still having the low cost of ownership to do that. For those of you downstairs, I said before, and Tom asked me the question, one of the biggest challenges you have is migration though. It's still just the scary word for established financial institutions on how they tackle that. So we've made significant investments into what we call smart migration, toolkits, capability out of the box, blueprints that we've created to really help organisations get on the journey. One of the challenges they have is that you see some great technology, okay, that's going to be a $5 million investment, but then there's this line item for $15 million for migration. And when the board asks what's that, they can't give a straight answer because they don't know. And that's why quite often so many of these projects get killed from a risk perspective because of the unknowns around migration and what's going on in the business. So it's certainly something that we sort of really focus on and we think is incredibly important. Just a use case I want to talk about very quickly on that. LHV is probably not that well known, but they're actually one of the largest BaaS providers in Europe. They currently here, LHV UK has about 190 regulated entities that sit on their platform or sit on our platform. They had a legacy in-house core, and they also had a next generation core at the same time, and we completed a migration for them, and it happened very successfully in a couple of months. And really it was about the four principles that we talked about. So, the ability to migrate in 2 months, that's unheard of for the sort of volume of accounts and transactions we're talking about, with no errors, no faults. They ran the 2 systems in parallel, or the 3 systems in parallel. Basically for 2 weeks, they shut the old systems off. They were that confident that the migration had gone successfully, which is really good. The ability that they're in full control. They have their own team of people that basically, and it's the ability that even all the 190 customers each have their own particular payment profile, product set that they're utilising on the platform, giving them lots of autonomy and flexibility. Leveraging ecosystem partners, and now the key thing, one of the metrics at the bottom, which is most important there, is the ability to innovate. So their budget now goes towards innovation rather than keeping the lights on from a regulatory and compliance point of view, which makes it super important from that perspective. That's it.